Housing prices have recently skyrocketed to unprecedented heights. But several data point to a pricing reset that could bring housing prices back to realistic levels. Join us in today's video as we go over a few analyses from experts and economists on the future of the American housing market. During the past bubble in the US housing market, housing values dropped dramatically. In the most recent few years, it has been the norm for prices to rise by a factor of 10 or more. In certain instances, purchasers were required to pay $100,000 more than the listing price of houses. The price of a house has increased 45% since March 2020, growing at a rate that many people are unable to purchase. Nevertheless, in the past several months, a substantial change has begun to take place. In today's market, home sales and price reductions have become the new normal, inducing a well-deserved cooldown in the red-hot housing market. An impending property market crisis that might cut housing prices in half has blown the bubble. In the video that we are sharing today, we provide several worrisome pieces of information that demonstrate that the fate of the housing market in the United States is looking very bleak. According to the National Association of Realtors, the property bubble that resulted in the largest bubble in existence has come to a screeching halt as a direct result of rising mortgage rates and the oncoming onset of recession. A familiar question is being asked by buyers and homeowners alike now that the trend has begun to turn around. How severe will the collapse be? The harrowing experiences of the previous boom and crisis are still very present in the minds of homebuyers, creditors, and realtors. The most recent price hikes are causing a great deal of concern, particularly because problems with affordability are making it harder for people to acquire homes. Throughout the course of the previous 2 years, a multitude of specialists and economists have repeatedly raised the alarm that the housing market was currently experiencing a bubble that was becoming increasingly difficult to maintain. However, it wasn't until things began to go bad that anyone began to note. And at this point, there are a lot of people in the United States who are very anxious because they are increasingly worried about a significant crash. Every indication was present from the very beginning. The term housing bubble typically refers to three distinct aspects of the market. To start, there has been an explosion of demand brought on by speculative buying that has flooded the property market. Second, record-high property prices that are considerably above what people can afford have reached overvalued levels. The housing bubble finally explodes in the third and final stage, which is where we are currently. This phase is defined by a precipitous drop in home prices. According to a newly published analysis by Redfin, some of the most desirable areas of the market are already experiencing significant dips in demand and some of the most significant price reductions. As a result of mortgage rates having more than doubled since August 2021, over 20 million potential purchasers have already been priced out of the market. Redfin's research from June 23 reveals that the Home Buyer Demand Index experienced a 16% year-over-year fall. That's the biggest drop we've seen in over 2 years, and it comes at a time when 30-year mortgage rates are getting close to 6%. According to Daryl Fairweather, chief economist for Redfin, the market was still quite hard with lots of bidding wars, and it was still very common for homes that go above asking price. He continued, but that has slowed down a lot since the Fed raised interest rates and continues to raise interest rates. It's now almost 30% more expensive to buy a home than it was just a year ago, so that's certainly slowing down demand. Both Redfin and Fairweather point out that housing markets in areas that have been particularly hot recently are certainly beginning to calm down. Following a period of increasing demand as well as rising prices in these popular migration locations, cities such as Sacramento and Austin have seen their real estate values plummet. According to the company's assessments, price reductions in Utah are being felt the most in the state's metropolitan areas. For the month of May, 40% of the houses listed for sale in Provo, Salt Lake City, and Ogden saw their prices decline. Price reductions are also becoming more typical in Western markets. In Tacoma, slightly under half of the available properties have had their prices reduced, while in Sacramento, 44% of homes on the market have had their prices reduced. A widespread collapse of the housing market has started, and the concerns that seem to be the most significant are how quickly and by how much housing prices might plummet. As per data provided by Wolf Richter from wolfstreet.com, price reductions increased by 50% from May to June and doubled annually. According to a survey by Moody's Analytics, real estate is overpriced in at least 93% of areas throughout the US, with houses in 11 states being overpriced by 50% and more. The states in question include, in alphabetical order, Arizona, Florida, Georgia, Hawaii, Idaho, Nevada, North Carolina, South Carolina, Utah, Tennessee, and Washington. With the current market conditions, all of these regions face the prospect of experiencing a 50% drop in property values. According to Moody's Analytics, homes are now even more overvalued than they were during the 2000s housing market bubble. According to Atom Data Solutions, as of this point in the year, a total of 30,881 residences in the United States have been subject to foreclosures, default warnings, scheduled bidding, or bank repossessions. In addition, creditors in the United States reclaimed ownership of 2,857 properties through the process of real estate owned, often referred to as completed foreclosures. And because the typical price of a home hit $407,600 in May, the number of homes sold has decreased by 8.6% since. The number of people applying for mortgages to buy homes is 21% lower than it was a year ago, according to data from the NAR. This demonstrates how quickly market circumstances are shifting as a result of all that has occurred. However, before the situation improves, it is destined to grow worse. This indicates that housing values will continue to increase in some locations, while other areas are headed for a nasty surprise. Ran Elyasaf, founder and managing partner at Northwind Group, a real estate firm, noted, "Prices are determined by two factors. Obviously, the market demand and supply, but also how much it costs to build. In comparison to the prices seen 2 or 3 years ago, the current market features a significant amount of steel, lumber, and concrete that are being sold at extremely high costs. The average amount of money needed to construct a home is currently far bigger than it was 2 or 3 years ago before the pandemic began. In the current market, construction won't take place until the builder is certain they can sell the finished product at the cost they want. As a result, we do not anticipate a rapid decline in pricing. The issue of affordability is going to continue to be a significant problem as the cost of both the mortgage and the furnishings for the property continues to rise." Elyasaf emphasized, "So a lot of issues in the supply chain are still causing delays, and housing will not be affordable in the near future unless we're going to see a huge supply coming in of new houses. I don't see that happening anytime soon because of prices." Because prices have increased so dramatically over the previous few years, even if they fall down eventually, they will stay substantially higher than they were before. The agony of prospective home buyers will continue for the foreseeable future. The price of housing is rising, making it harder for people of all income levels to buy it. Fairweather of Redfin notes, "Rents are going up just as fast as home prices are. Right now, nearly everything that American families need for daily living is costing them record amounts. In addition, many people are being forced to continue renting despite the fact that rent costs have reached all-time highs since there is a scarcity of available housing. In actuality, there are fewer homes for rent or sale currently than at any point in the preceding 3 decades. Despite Americans' better salary in the last year, with inflation and supply issues, how does this measure up? As a result, the pay increases are nullified. Because of this, it is becoming increasingly difficult for millions of individuals all over the world to stay current with the ever-increasing costs of both renting and purchasing new homes." According to Danitha Do, an economist at the real estate analytics company Clever Real Estate, rent costs in the United States are increasing at a rate that is 4 times greater than the rate at which American salaries are increasing. She stated, "I don't think any of us could have prepared for the astronomical increases in home prices and rental prices. none of us could have prepared for the pandemic as well. From 1985 to 2020, the national median rent price increased by 149%, according to statistics from Clever Real Estate. During that time span, the entire income climbed by only 35%. The median rent in 2020 would be $586 per month rather than $894, or nearly 34% less if rental rates had increased at the same pace as earnings since 2000. On the other hand, the cost of rent today is around $1,100 more than it would be in 2020. According to a second Redfin analysis, nationwide posted rentals for available apartments increased 15% from a year earlier, with a median listed rent exceeding $2,000 per month. 3 major cities in the United States have seen rent increases of more than 30% in the past year. These cities are Austin, Seattle, and Cincinnati. The median amount of money that landlords charge for monthly rent in Los Angeles is $3,400. Even in once affordable locations like Nashville, it is now $2,140, a 32% increase from the year before. The absurdity of these numbers needs no further explanation. It is obvious that the housing and rental market cannot continue reaching a new all-time high virtually every hour. Thus, resetting the cost of living is in the works. The new reality is slowly but surely being accepted by a growing number of sellers and landlords. Prices must be readjusted to aid the lesser availability of purchasers and renters who can be found someplace but at far lower prices. Those who have reaped the rewards of previous speculative bubbles had a strong motive to downplay the possibility of this one bursting. When speculative excesses lead to overinflated markets, like in the case of the US housing market, the bubble peaks and then starts falling. It is possible that the price will fall to levels well below historical lows if the system continues to collapse. We can only hope that the current decline in property values will not result in another worldwide economic catastrophe. What do you guys think about the future of the housing market? Do you agree that prices will eventually go back down? Give us your thoughts in the comment section down below. If you enjoyed this video, please like and subscribe, and we'll catch you on the next one.